Hello, my name is Matt. I'm the day trader next door. Today I'm going to go over all the things you need to consider when you want to get started trading. Now, for the purposes of this video, I'm going to be talking about futures trading, which is what I trade every day. So we're going to go over all the things you need. We're going to talk in depth about brokers and platforms and fees and all the things that go along with this. Try and give you a really good idea of what you need to look for when you're getting started. So the first thing you need is some money. Now, how much money is that? I'm going to say really nice to have at least $1,000 to get started in this. Have that as your trading capital. Set it on the side in a separate account. Now, you may not want to put all that in your broker right away. You might want to just put $500 in. That's fine. But either way you look at it, you got to be prepared to say goodbye to whatever money you put in your first account. You may not want to hear that, but I'm just telling you the truth. Oftentimes your first account is tuition. It's just the way it goes. If you hold on to it, then that's great. But just be prepared for that to be tuition. Now we're talking about for trading one micro E-mini contract of the S&P or the Dow or the NASDAQ, something like that. In the S&P, it's only $5 a point. If you have $1,000 set aside that you're willing to part with and you're only trading for $5 a point, you won't worry about the money and you'll be able to focus on the trading. Next thing you need to have is time. You need to have the time to trade the markets when they're active. Day trading isn't like you just go and sit down when you got nothing else to do and push the button a few times and make a bunch of money. You have to go to the market when the market wants to pay you. You need to trade the active times. In the index futures, that's the New York market hours, 9:30 to 4. The first couple hours of the London session move quite well in the overnight around 3 a.m. Now, if you live on the West Coast, it might be not so hard to get up early before work and trade that. I live in the Eastern time zone, and I got up to trade the London session every day for 3 years, so it is doable. The next thing you need is commitment. Commitment to demo trade until you've learned or developed a strategy with a positive expectation that also has rules to keep you out of trouble. If you don't already have that, check out some of my other videos. I've been recording my live day trading for a while, so you can see how I get in and out of trades. Also, sign up for my mailing list if you like. It's free. I'll send you little tips and tricks now and then, the levels I'm looking at in the market. Also, a commitment to follow those rules once you start trading with real money. So with any luck, you wind up with more money than you started. And of course, a computer. Now, you don't need one just like this. Mind you, this is actually quite affordable for what it is. Another link up there if you want to see how I made it. But you do need a computer with a decent sized monitor, maybe 2, wired mouse, wired internet connection. Again, that video I just showed you kind of shows you all the things that I think are necessary. So now I'm going to flip over here, go on to the computer, and we're going to talk about how to choose a broker, what's important in the broker, and also how to choose a platform, what's important in a platform, and all the fees that go along with this. Okay, so as far as choosing a broker, I'm just got AMP's page pulled up. Not trying to hype them over anybody else. I don't have any relationship with them other than I'm a customer, but I've had really good success with them. Some of the things that's kind of important here. No inactivity fees. Some brokers will charge inactivity fees if you don't trade. You don't want to get charged if you're just demo trading or if you don't trade enough volume in a month or whatever. They have a $100 account minimum. Now, that's not enough. I imagine that means that's the minimum that lets you take a trade with. You'd want to put at least $500 in an account to get started trading one micro ES. $300 ES day trade margins. Now, that's wild. Don't trade an ES with $300 in your account. My margins are actually, I think, $500 because of the commission structure I'm under. They give you a couple options. If you keep $10,000 in your account, you can pay less commissions but have a little bit higher margin, like $500 is what mine is, I'm pretty sure, last I checked. Or you can pay more commissions to trade with a $300 margin. Not a huge difference, but it is one. In this case here, $40 micro ES margin. So that means to trade one micro ES, which is $1.25 a tick, so $5 a point, you only take $40 worth of margin on hold in your account to trade that. Now margins, I sort of touched on that earlier. Here's a list of the margins, for instance, with AMP. A lot of the discount brokers are going to be similar. Micro E-mini ES right here. Day trade margin's $40. That means essentially you can place a trade anytime during the day or the night, but you can't hold it over the pause in the afternoon, and you can't hold it over the weekend. If you want to hold a trade over the weekend, you're going to have $1,100 in for one micro. And you don't want to be doing that anyway. You don't want to hold it through the halt, you don't want to hold it through the weekend. Now the mini Dow is $50, mini NASDAQ's $100. That's all quite reasonable. The microcurrencies are all between $40 and $60 or so. Swiss franc is still high after that. big move a few years ago. Okay, now into commissions. The commissions are actually not just commissions. The commissions themselves are generally the smallest part of a discount broker, but there's the exchange fee, there's a routing fee through your routing service, CQG in my case. So what you want to know is the all-in round turn or all-in per side commission. This gives a little breakdown. This is a flat pricing for any of the free platforms. You can pay 42 cents per side for a micro. So 84 cents round turn. If you want to look at that as far as ticks, it's about 2/3 of a tick. Not so bad. You can think of Forex and you got a spread of 2 or 3 ticks. Out of that 42 cents, 25 cents goes to the exchange, 10 cents goes to CQG, National Futures Association gets 2 cents, the broker itself only gets 5 cents of that 42 for commission of executing your trade. So it is more expensive to trade the micros, but it's still not that bad. When I trade a full-size E-mini, I pay $3.70 a round turn. Now for the same notional value of the contracts, it would be the same as having 10 of these micros, $4.20 a side times 2, $8.40. So I'm paying $3.70 compared to $8.40. It's a lot more, but when you really think about it, I'm paying like 1/3 of a tick, and you're paying 2/3 of a tick if you trade a micro. That's really not bad. It's less than a tick. Well worth it to be able to get into this without trading a full-size mini. Now you do need live data. You'll get free data, free delayed data with TradingView, which is great for study, or I think you can even practice trade on it. But if you want to actually trade, you do need real-time data. You can get it for each individual exchange. You pay for it per exchange, not per instrument, but per exchange. So, and you can get individual ones, or you can get the bundle. I get the bundle of the main exchange. So there's the CME, that's your indexes and currencies. That's what the ES trades on. And Chicago Board of Trade, that's the treasury bonds and the agriculturals, stuff like that. The NYMEX, essentially energies, and the COMEX is the metals. So if you're just going to trade the ES, you may not need data on all these things. You can get free data from like a CFD feed, from like a Forex type of feed for spot gold price or the spot silver price or spot crude price. It's not going to be the same as the futures, but the direction is probably going to be the same. If you want to just keep an eye on that, you can get that for free in TradingView. Now, if you're just going to trade the ES, you could just get the CME, pay $11 for it, and that's it. It's all the data you need. You get all the indexes on that. If you want to get all these things together, well, it's 4 of them. You get all 4 of them together, you only pay $30 plus the $1 admin fee to CQG. The other thing is there's top of book data, as you can see, but you don't want that. That's just the price. That's that's no market depth or anything. You can't see how many orders are on each price level. You don't get to time and sales. You just get the total quantity at the bid and the ask, I believe, with that. Now, while we're on fees, a couple other things you got to consider. If you're in the US, it's great because anytime you want to take money out, it's free. Now, I'm in Canada. I got to pay $30 US for a wire every month, plus another $25 to my own bank here for accepting that wire. I haven't found a way around that yet, but it's not the end of the world, really. So if you want to send money to them and you're within the US, you can do a free ACH bank transfer. You want to take money out, do a free bank transfer. If you're in a different country, you're always going to have to send a wire. The good thing about app, if you're trading with a foreign currency account, is they have a number of different currencies that you can actually hold your money in. So whenever you send them, say Canadian dollars, they hold it as Canadian dollars, so you're not adversely affected by the exchange. Your account balance is displayed in US dollars. It will go up and down depending upon the exchange rate, but your actual dollars in your home currency on deposit will remain unchanged. One thing worthwhile looking at here, if you margin call, they charge you $25 a contract to close your position for you, so we don't want to let that happen for a number of reasons. So in summary, as far as brokers go, just do your research. I've had great luck with AMP. Well, there's lots of other discount brokers out there. Do your own research. Pick one that you feel comfortable with. Another thing about brokers, what if I'm not from the US? So what if I'm Canadian, like me? I can't speak about other countries, but for Canada, we have the CIPF. So our deposit money at a broker in Canada is protected against the solvency of the broker. Now, if you use a US broker, you don't have that. However, it is so much easier and cheaper to use a US broker. I would say use a US broker. The minimum amount you need for your margin, your $500 or your $1,000, and just keep the minimum down there. The odds of them going bust are very low, though it does happen the odd time. Remember PFG best. Another question is, do I incorporate or not? Well, you're not going to incorporate with $500 or $1,000, but realistically, don't bother incorporating until you're profitable for at least 1 year. Talk to an accountant. They will give you the proper advice about that. Also have an accountant do your taxes. It's much easier that way. Now, you also have to think about what platform you want. Now, I use Sierra Chart. There's a couple ways to look at it. As I mentioned, Sierra is great. It's just got a heck of a learning curve, and you have to pay for it. It's not free anymore. It was never free, but the broker used to pay for it. They don't anymore. Look for a free platform on the CQG feed. You want historical charting, chart trader, OCO orders, and auto bracketing. That's important, that you can just pre-program it so when you click your order, there's your target and your stop are already on the screen. You can just drag them rather than having to manually add them. That also stops you from letting a trade go against you because you automatically have a stop there. You can adjust it, but you can't just let it go. Server-side orders, absolutely. We want to have some sort of a mobile app so that we can get out of a trade if our internet quits at home. Now, realistically, if you deal with CQG, they have their own app. You just log in with your credentials, regardless what platform you're trading on, and you can do it that way. So from what I see here, MT5, MetaTrader 5, any of you Forex guys ever traded on MT4? What a nightmare. To their credit, they're reliable, but just no fun to use. Sierra, it does say is free here. However, we all got an email like a couple of months ago or a month ago saying that no more with the broker is going to be paying the fees. You got to pay the fees directly to them and so on. So to me, looking at this, multi-charts is good. I've never traded right through multi-charts, but I did download it. It's a full-featured platform. You can use tick charts. You can get time and sales. You can create a quote board, OCO orders, bracket orders automatically. I would strongly consider that if you don't want to pay the $30 a month for Sierra, or go with TradingView and try that to start. You can always switch platforms with your broker. Like if you go on with TradingView and you decide after a couple of months you want to move to a physical platform, they'll let you do that. Now all these have demos. You can get a demo of Sierra charts, you can get a demo of multi-charts, and you can get a demo of TradingView. Go try them out for yourself, because I have tried trading live on TradingView and it's worked flawlessly. It's just really easy to do. It's an excellent platform. The nicest thing for charting. I would never want to go without them for charting. Like all the charts that I do, trying to program all that into multi-charts or Sierra. So my recommendation, probably, if you're starting off with $500 or $1,000, keep your recurring costs down and go with something like multi-charts where the broker pays your fees for you, or just try TradingView first. Another great thing is all these platforms will let you demo trade for as long as you want. The main thing is that you have a broker that doesn't penalize you for demo trading. If you're putting $500 into an account, you don't want to be paying $31 in data and $35 for your platform every month, do you? Really? That break you go broke in a year without taking any trades. It doesn't really make sense, right? Another reason I would not necessarily recommend you start with Sierra chart or something like that that's paid. Now again, my favorite of these to use for actual execution is Sierra chart. The downsides of it is it has an extremely long and steep learning curve. There's a quote here I found on a forum that is just perfect. Sierra chart's user interface is complicated and the online documentation was written by a maniac. It's really like there's like a learning curve both to the software but also to the help section. Having said that, in my opinion, it's the best, most reliable option for me. I've been using it for years, and I honestly don't think it has ever crashed on me. At the same time, I've been using it for years, and I still don't really know how to use it. So as far as the platform goes, like I say, TradingView is just beautiful and so easy to use. I'd see no problem if you're starting out at bare bones, $500, you don't want any recurring fees, all in one spot. Give it a try for your first couple of months or just give it a try to demo trade on. However, if you stick with this, you're going to grow into a real platform eventually. If you can get one for free, like multi-charts, I would definitely recommend giving that a try. And that way you can get tick charts, time and sales, and all the other features that you come to expect with a real platform. Even with that though, TradingView for charting is wonderful. Even if you can't get the multi per screen like I do, just use the free one. You can have one chart per instrument. It only takes a couple of keystrokes to change the time frame. So anyway, guys, I hope that was valuable to you. Give you a little bit better idea of where to start. Any questions, comments, of course, put them down there. I'll be glad to help as much as I can. All in all, keep it simple, keep it inexpensive, and remember, you're getting into a whole new journey here, so don't expect overnight success. So many traders fail, but I think if you start off on the right foot, with the right kind of education and the right kind of rules, you can really help improve those odds. Anyway, thank you so much for watching, and we'll talk to you soon.